What is your high conviction trade? Do you get into the bond market? Is that where you seek sort of haven status? And if so, which parts?
So yeah, across bonds, we're moving away from the traditional developed market bonds, more into areas like Australia, South Korea, where you've got a kind of higher level of yields. So it means that if you do head into a tricky time in terms of markets, a trickier time in terms of the economy, that we do have some protection, some cushion from those bonds. More interestingly, we've been moving into these equity laggards more recently, value in particular starting to build a base there, infrastructure as well, where the valuation case is strong from a medium-term perspective.
Justin, what do you think about the possibility that Europe plays a little bit of catch-up here with the U.S. as tech stocks get hit so hard? And, you know, that's always been the wind in their sails, or at least our anchor. Does it help that in this time period that Europe maybe isn't as tech-heavy as the U.S.?
I think it does. I think you see the differential between the U.S. and the rest of the world, particularly since March, but also, you know, as markets fell from the end of February, and tech has outperformed on the downside, outperformed on the upside. I think kind of more recently we're just seeing the froth come out of the market overall. The big challenge, I think, is that the tech stocks, as a proportion of the overall market, are clearly greater. So then when tech stocks become volatile, when you see these sell-offs, the risk of spillover to other stocks, other sectors, is clearly higher. So this concentration conundrum that I've spoken about before, as investors that we have, with tech stocks really dominating indices globally, is a real challenge. But by spreading across different regions, spreading your risk over different regions, and diversifying your equity exposure, we do think that should be beneficial over the long term.